I'm Keith McCullough, and welcome to another Real Conversation. Behind the scenes here, we always talk about our content being timely and topical, okay? Apolitical too, preferably in some cases, data-driven. When I was thinking through and preparing for this conversation, I was actually preparing for Jim Rickards' new book, which is MoneyGPT, which we'll definitely have in and throughout the conversation. But then I wake up to nuclear war, talk this morning. We've obviously had the election, which Jim called. So there's a lot to traverse here, Jim. Thank you for making the time. It's a perfect time to have you in that seat.
It's great to be with you, Keith. The funny thing about the book business, in some ways, it hasn't changed that much since the 19th century. I think Dickens would be right at home with modern publishing. Now, audiobooks and digital versions, etc., that's one thing. But the actual hardbound, hardcover book, you need ink and paper and printing and boxing and shipping, and you have to write them. And the lead time is kind of like a year and a half to 2 years. Sometimes it could be 5 years, but in my case, a year and a half or so. So when I proposed this to the editor of my publisher, she said, "Jim, really good idea. I like the idea. AI, GPT, it's hot and you can do it. But how do I know this will still be a hot topic a year and a half from now when the book comes out?" I said, "Nikki, I promise you it will be hotter than it is today," which turned out to be true. That was kind of an easy call. But I didn't realize, for example, we'll talk about it if you like, but there's a whole chapter on nuclear warfighting. Now, I thought the intersection of AI and nuclear warfighting was really, really important. That had to be explained in depth. It's not just another algorithm, hook it up to get one for the Pentagon and go from there. It's really critical. Little did I know that the night before this interview, Putin would come out and say that it's Russian policy that a non-nuclear state backed by a nuclear state that attacks Russia will be considered an attack by the nuclear state. No, it was the United States. So we're actually put Britain and France in because they've got their own missiles that will probably be firing into Russia very, very quickly. So it's real. The threat's real, and that the discussion in the book is more important than ever.
This in chapter 4, it's called National Insecurity, and the first sentence is nuclear warfighting is in the air. And you're quite right. There's so many different topics here to hit, but completely in and around that is ChatGPT, are the bots. Yesterday, I'm sitting there just watching, because I'm long NLR, which is nuclear, the ETF, uranium, I'm long that. And I'm like, shit, this thing is starting to my signal is smart, right? It's got some AI in it. It's looking at the rate of change of relationships between price, volume, volatility. So therefore, you're seeing the volume go up. The prices of these things were up 6% intraday.
Right.
And I'm like, wow, somebody must think they know something here.
Yeah.
And this is happening, Jim, so frequently on government leaks, of economic data. It's almost like a habit now, just to look for it. It's just what time.
Oh yeah.
And I want to start with that because we'll go back to you helping me envision what the risks are, which I think is super important with AI. And a lot of people may not want to hear about the risks, but that's too bad. We're going to talk about them.
Right.
But just the ability for the machines to find that information. Does it have to be an individual, like some sneaky dude, leaking government information, or do you think that the machines are smart enough at this point to figure it out and grab it from government data itself?
Oh, the machines are definitely smart enough. I mean, people have Alexa, Siri, Siri's on your dashboard, your iPhone, Alexa's in your house, Alexa, turn down the lights, whatever. People don't realize first of all, one of the points I make in the book is this is just human nature, we anthropomorphize inanimate objects. We give them human characteristics for whatever reason. Some of it's harmless, like Winnie the Pooh is actually not a person, but children think of Winnie as a person. That's fine, it stimulates your imagination, etc. But we have the same thing with Alexa. It's got a Siri's kind of androgynous, but Alexa is definitely a female voice. It's very comforting, it's very reassuring and all that. And we start treating Alexa as a friend. First of all, it's not your friend. Secondly, it's all math. When you do the deep dive in artificial intelligence and you're into layers and nodes and edges and weights and all the things that actually go into, I built AI systems, it's all math. So, okay, but it's not your friend. But we tend to give it these human attributes. And the same thing applies as to make the point in the book, in the stock market, nuclear warfighting, et cetera. We tend to trust the system when we shouldn't trust it. You have to understand how it actually works. But the Alexas talk to each other. If you're in a neighborhood and there's 7 or 8 Alexas, they'll talk to each other. They can profile you based on what they're picking up, based on their algorithms and how they're programmed. All that information's going right to Google, by the way, so that's no mystery. And they can call the cops on you. So, okay, I once got an Alexa in the mail. I was buying something from Amazon. I shop there all the time. I guess I clicked the wrong button, and they threw me like a free Alexa with whatever books I was buying. So I didn't order it, but it showed up. I took it out. I keep a sledgehammer for various purposes, but I actually destroyed it with a sledgehammer because I certainly wasn't going to install it, but I didn't even want it around. But my family members have them. They're pretty popular.
Mm-hmm. Well, I mean, you go right at it, and your critics really should. I almost felt like, which I know you didn't, but maybe you did. The first sentence of your book is like trolling them, because you basically say this is how the game ends in stock market terms, and I'm like, wow, this is like Rickards at this stage of his career. He just doesn't give a, he's right at it. And then I was reading it, and then I started to get actually a little concerned. Like, he understands like all the different permutations too well. Like if that Chinese person or that terrorist reads this book, they now have a pretty damn good plan.
Yeah.
Now I'm not trying to scare people, but I mean it's just basically using you're one of the few people that like is polymath in nature, but also has the market experience and understands how the machine works versus versus what you just said was these are the mechanics of AI.
Well, hearing is a funny thing. It can be maybe not as good as it used to be, but it can be very selective. And I was once giving a presentation in the director's conference room on the 7th floor at the CIA headquarters, and there were a couple people sitting in the front row, and I was just giving my presentation like I could do, and one guy turned to the other and he said, "He knows too much." But it wasn't meant to be heard, but it was one of those things I can kind of zero in on. But here's the point, to your point, Keith. Yeah, it's kind of a blueprint, but I've never done anything that I didn't think the Chinese could figure out on their own. My view is if I figured it out, the Chinese can figure it out, the Russians can figure it out. It's good to keep up, and the whole purpose of a book is just to get the information out there and share it with other people. But I never, but people said that to me, you've given them a blueprint to take down the market. I said, they got the blueprint. I'm just explaining to everyday investors how it could happen.
Well, if you actually understand the market and the current state of the machine, you can't put chapter 1 down. Because it's like, okay, how's Rickards going to spin this one? You bring in the fake Fed or however you're staging that. Can you have what he does is he actually makes, you could imagine a Fed presser or any government bureaucrat saying something opposite of interest rate policy and moving the market. I mean, this thing is so frickin' wired right now for these types of things. I mean, 0 days to expiration came right on the heels of ChatGPT going public, 2022. These things happen very quickly in markets. And I thought that the most important thing was showing the timing.
Timing and amplification, and also the feedback loop. So let me kind of break that down.
The behavior, like the predictable behavior.
The predictable behavior of AI. Now, human behavior hasn't changed much in 50,000 years, as far as I can tell, or at least the length of history. I could point you to financial crises in the mid-14th century, the houses of Bardi and Peruzzi in Florence, when they collapsed and echoed all the way to the UK. So that was 700 years ago.
Hedgeye's Cyber November deal is here. Get the best deals we offer all year. Scan the QR code to find out more.
So human nature hasn't changed, but what has changed is the interaction with AI. And it goes to the first point I made, which is that we tend to treat it as, we anthropomorphize, we treat it as humans, but as a human interlocutor, which it's not. But so it's a nonfiction book, but chapter 1 is a fictional scenario of how AI will cause a market meltdown, will really amplify a market meltdown. So I've got hopefully people enjoy it. I won't give away the whole plot, but so there's a wealthy family office manager. He manages his own portfolio, but he has an AI assistant. He comes in the morning, they get coffee, and they chat. Then there are 2 seasoned hedge fund veterans, but they're master manipulators. They're crooks, basically. Their servers are in the Congo. I've been to the Congo. It's not an easy place to penetrate. So they're in Mallorca because the view's nice, and so they're gonna manipulate the market. But then there's a Chinese cyber warfare unit in Beijing, and they're trying to sink the markets. They're not trying to make money like the hedge fund guys. They're just trying to sink the markets because they want to destroy the West. Now I have the Fed chairman. He's the last to know, as usual, and then some reporters. So that's the whole scenario. But the way it plays out, the family office kind of goes long certain securities. The The hedge fund guys, the manipulators, they're waiting for the market to go down. This is what the military calls a force multiplier. So if you're trying to sink the market, don't do it on a day when the market's going up because you're swimming upstream. Do it on a day when the market is starting to go down, and then you can pile on and drive it down further, faster, obviously. And the Chinese, same thing. They're waiting for that kind of day before they jump in. But here's the point I make, which is, so there's some deep fakes. So the guys in Mallorca, they, if you, and this has been done, this is, one of the points I make is that there's nothing in the book that's like coming. It's all here.
Yeah.
It's being used right now. So you go.
If anything, that example might be a little old.
Well, that's right. That's right. You go to some of these synthetic synthesizer type companies. You give them a couple hundred hours of videotapes of yourself, a lot of voice tracks. I mean, I've got it. You've got it. We do plenty of interviews. And then they can film a backdrop. They can synthesize you. This one reporter actually did it. She went to them, gave them plenty of tapes and voice samples and everything else. And she said, synthesize me. They did. She showed it to her mother, and her mother couldn't tell. Mother thought it was she. So that's easy. So you can make a deep fake of Jay Powell. Jay Powell's not in the book, but we have a Fed chair. But the real Jay Powell giving a speech at the Economic Club of New York. But we've got tens of thousands of hours of voice and videotape and audio tape or combinations. You could easily do deep fakes of Jay Powell. But the scenario in the book is that markets expect interest rates to go down, but Jay Powell gives a speech supposed to be about fairness in the mortgage market and equal opportunity and all that. So the press doesn't cover it because that's a boring topic. But in the speech he says, by the way, inflation's not doing what we want. We're going to probably raise interest rates. We'll see what happens. Well, they leaked that, but it was because of a fake video and a fake leak. They get it out there. But meanwhile, in the book, the chairman has left the speech. He's on the plane back to Washington. They're frantically, people in Washington are frantically trying to get them on the phone. Anyway, this gets out there, but then it gets worse with kind of deep fake press releases, etc. It's all amplifying itself. But the point about AI is the following, which is everything I just described happens faster. Mm-hmm. Everything gets amplified, and there is no mastermind. The family office guy doesn't know about the hedge fund manipulators. The hedge fund guys don't know about the Chinese cyber hacking units. The Fed doesn't know anything. They're just giving a speech. And it's all happening kind of organically. This is how complex dynamic systems work. A complex system will produce results that no amount of knowledge about the contents would enable you to predict. It's called emergent property. It just kind of comes out like a volcano exploding. And that's the scenario. So again, some of it is human nature, but we're building human nature to an extent into the AI. Now again, I said it's all math, it's not human. It doesn't work like a human brain. It mimics the output of human brain. It doesn't work like a human brain at all. But just the fact that it can mimic it is dangerous enough. But then you get into this feedback loop. So what are we doing? We're outsourcing decision making to the AI. There are always some hedge funds, that's your client base, broadly speaking, that are using AI to pick stocks. And they've had some early success with it. Yep. Now, we all know that eventually people pile in and that edge will start to go away. But for now, it's a real thing. Investment advisors, not all of them, but most of them, you go in, you're a client, you go in, you sit down, and they say, well, we'll have a few questions for you. How old are you, and what's your family structure, and what does your portfolio look like, and what are your goals? Do you want to own a vineyard, sail around the world, whatever. And they get all this, and then they say, well, we'll have a plan for you. What the clients don't realize is that all the algorithms are the same. They put that data in there. The plan comes out, whether it's 60-40 or 70-30 or a slice of alternatives or whatever. Basically, you get a menu of plans, and the people they should have confidence in their investment advisors. I'm not dinging the profession. I'm just saying it's all automated and they're all the same. So the same thing is true in trading to some extent. So now, what do people do in a panic? And they happen. Market crashes happen. You could speculate on causes. It's almost irrelevant. They just happen.
One just happened on August the 5th. We're old enough to remember that. VIX 65.
Correct. Yeah. And then March 2020, the stock market fell 30% in 1 month. It wasn't the biggest crash in history, but it was the fastest crash of that magnitude in history. So not that long ago at all. So what do people do? Well, they kind of watch it for a little while, and they're going, it'll come back. I'm right. The market's wrong. Whatever. And then they're like, sell everything, get cash, move to the sidelines, wait it out, wait till it bottoms, and then tiptoe back in and catch the next wave up.
That's what street smart people do who have a track record of understanding that fractal pattern as
Right.
it's developing.
That's right.
Like the first dip I bought wasn't a dip.
Yeah.
Like I say that all the time. The first sign that I'm going to lose money is that I'm losing money.
Right.
But a lot of people, we have the most participants in world history.
Right.
Being a retail investor, according to me, is not a compliment. I mean, these are like yo-yos, just chasing.
Yeah, but they're out there. And then so I talked about anthropomorphization, which is one problem. But now we're going to do something else called the fallacy of composition. And what the fallacy of composition says, Keynes was big on this. He said, a strategy that makes very good sense for an individual, just absolutely the right thing to do, can fail catastrophically at scale. So, simple example, you're at a baseball game and you don't have a good view because the guy in front of you is particularly tall or he's got a big hat or whatever. So you say, well, I know the answer, I'll stand up. And now you stand up and, hey, I got a great view, this is fantastic. But what happens next? Well, the person behind him stands up and the person behind her stands up, and pretty soon the entire stadium's on their feet. Nobody has a better view because relatively you're back where you started, but everyone's on their feet. So everybody's worse off, nobody's better off. That's the fallacy of composition. Now apply that to stocks, and obviously the strategy, sell everything, get cash, go to the sidelines, wait it out, come back in, is a good strategy for an individual. But if everybody does that, what happens? All sellers, no buyers, market goes straight down, blows to the first circuit breaker, blows to the second circuit breaker, and goes to the floor. And then you actually have to close markets. There comes a time, we came very close to this in the LTCM days, by the way, but people say that would never happen. The New York Stock Exchange was closed for 5 months, from August to December 1914, at the outbreak of World War I. That was the curb market. Everybody, they were classified ads that said, bring your stock certificates and cash and meet you on the street. But it was closed for 5 months. It was closed for 4 days after 9/11. So these things do happen. But here's a situation where you would actually have to close markets and query how easily you could reopen them. But it's the outsourcing to AI, the fact that the AI algorithm is exactly what I described. Now, what happened in the old, it's long gone, but specialist system in the 70s, 80s, early 90s, the specialist had a privilege and had a duty. The privilege was you got to be the market maker in a particular stock. It could be Chevron, Exxon, whatever. And you got to see the back of the book, not just the best bid offer, but you could see the whole book. So that was it was legal inside information. That was your privilege. Your duty was you had to stand up to the market. When there was a wave of selling, to some extent, you had to be a buyer, try to equilibrate. If there was a frenzy of buying, you might want to be a seller. Just damp it down a little bit. You didn't have to stand in front of a moving train, but you did have to damp it down a little bit. That's long gone. A friend of mine is the director of floor operations of the New York Stock Exchange. I was down there with him one time, and he said, Jim, don't let anyone tell you there's any liquidity on this floor. I mean, there isn't. So I didn't think so, but thanks for the...
But that setup, it was a very astute observation that you've removed the specialist and that role being a critical role. The buy side has a back book. The buy side knows what their front end books are doing. So it's interesting because they all sort of operate, not sort of, they explicitly operate on the same rules, proactively predictable behavior, 1 month price momentum rules the day. There's a lot of things there. Like unless you're me or someone like me or you're reading this and you're like, this sounds like just science fiction.
Yeah.
But it's not.
Right.
Like your whole point, like fake video, fake news. I'm making one of those, like, fake Keith, but it's real Keith, so that we can efficiently communicate all of our content, like using bots.
Sure.
This is all happening.
Right.
So the things that you're saying, I think they might get dismissed by people who don't understand the game that we're in, because that game is alive and well.
Yeah. Yeah, I mean, look, I'm on X a lot. There's AI every day. Well, not every day, like every 5 minutes. But they have to label this as a parody, or somehow let you know you're in on the joke. Because there was one guy who posted something like that. He's in jail right now for what they call disinformation. Disinformation is anything you disagree with. It's called disinformation.
They're really good. I mean, the Toronto Maple Leafs, which are like the bane of my existence, being a fan since I was born and not winning a Stanley Cup.
Right.
They had one of the best fake press conferences by their new coach Berube.
Yeah.
Just ripping, like it was literally the perfect teardown of the current Maple Leafs, the players by name, their tendencies. It was awesome.
Right.
And people like my dad, he's like, is that a bot?
Yep.
I'm like, of course that's a bot. You can't say that in this day and age at a press conference. But it was dead. It was so authentic and dead on the screws, right?
Right. But now that we've determined it's feasible, it's easy, and it's ubiquitous, how long before there is a fake JPAL press conference? The hacking was the easy part. Actually building the the fake video is the easy part. You need other things. I have the Chinese penetrate and order entry system for a major broker dealer, et cetera. So yeah, there's 7 or 8 or 9 elements that come together, but I make the point that there's no mastermind. The feedback loop is the fallacy of composition. A good strategy for an individual investor, or even an institutional investor, will fail. The market will fail catastrophically if everyone's doing the same thing. And then we anthropomorphize it, we trust it too much. So I never give those kind of scenarios. Thank you. I thought it was very realistic. I wasn't trying to be Jules Verne. I wasn't trying to stretch the envelope in terms of what could happen. There was nothing in there that I hadn't seen myself or knew was available technology, et cetera. I don't do that without offering some solutions, and I offer 2. One is, and I sound like a broken record, but don't be 100% in digital assets. So when I say digital assets, I'm not talking about cryptocurrencies. Fine, stocks, bonds, commodities, they're all digital.
Yep.
They're on digital ledgers. So that's a world that's very vulnerable to the kind of thing I'm talking about. Have some gold, some silver, some land,
Physical
fine
gold,
art,
physical silver.
physical bullion, fine art, hanging on the wall, enjoy it while it's there, land and natural resources for a slice, or even alternatives. See, at least with alternatives, private equity and venture capital and some hedge funds, you don't expect liquidity. Going in, you don't have liquidity. You're like, hey, it's a 7-year deal or 5-year deal or quarterly redemptions after 2 years, whatever the terms are. But you won't miss the liquidity because you don't expect it in the first place. But if you're treating your 401k or your IRA or even an institutional portfolio as liquid so that you can manage your liabilities, don't count on it, because that's what we're talking about when we say shutting down markets. So that's real diversification. I've said before, I run into people, they go, oh, Jim, I hear you, I'm fully diversified. I've got 50 stocks in 10 different sectors. I've got, consumer non-durables, mining and minerals, semiconductors, whatever. And I go, you're not diversified. You may have 50 stocks, but you're in one asset class, stocks. And when you don't worry about it, they may be non-correlated to some extent. When you need it most, they're completely correlated and they'll go straight down. So that's why you need these other assets to protect you. But the other thing I mentioned is called cybernetics. Cybernetics comes from a Greek word. When the original meaning, this goes back to the Iliad, or the Odyssey. The original meaning is the helmsman, the person steering the boat. That's the original meaning of cybernetics. And what I suggest is that right now we have circuit breakers, and I worked with, sadly passed away, but David Mullins Jr., who was vice chair of the Fed, but also deputy assistant secretary of the Treasury under Nick Brady. And he led the report after the October 19th, 1987 meltdown, when the stock market fell 20% in one day. That would be like 8,000 Dow points today, not 800, but 8,000. But they invented circuit breakers. And that was an improvement over what they had. So it would be a timeout. But it was kind of still back in the tail end of the specialist days. The whole idea of the timeout was that people could talk to each other and say, hey, Keith, maybe there's something going on. Maybe this isn't as bad as we think. Maybe it's time to buy, the kind of Whitney thing, walk around the floor and just buy up.
Yeah,
all
like
the
maybe
stuff.
the Fed didn't say that. Let's call them.
Correct. Well, that exactly.
You use that example.
Well, yeah, I couldn't get them on the phone. But that's right. But okay, is there a refinement on that? So the example I give is, if you're driving on ice, and I have a place in the mountains, so I'm driving on ice and snow all the time. If you're driving on ice and you slam on the brakes, the car's not going to stop. It's going to keep going, probably spin out of control, maybe go off the road. So what do you do if you're driving on ice and you need to slow down? You don't slam on the brakes, you pump the brakes, pump, 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 2 hands on the wheel, steady as she goes, and bring it to a halt. So what's the equivalent of that in the stock market? Well, instead of just a circuit breaker, shut it down, you could throttle the orders. So I'll just make up numbers, but at down 5%, you sell 1,000 shares and go, sorry, we're only going to sell 500. We'll put the rest in the queue. You haven't lost anything, but down 10%, we're only going to sell 100. There's pump the brakes rather than slamming on the brakes. Throttle the orders, dial it down, try to get some calm, and again, the ability, whether it's public officials or just big investors or others, just to talk to each other and reason it out. It's not a cure-all, but it's an improvement over what we have now.
Well, the rules of the game have changed in terms of how you play it to win it, but the rules haven't changed to govern it. Like,
Right.
there's no, like, the uptick rule's gone. There's like a lot of things that when I came into the game, that, specialists, uptick rule, all these different things. But there are no rules to govern
Right.
0 days to expiration options trading, which is over 50% of the volume daily.
Right. Right.
And that's what really gets, like, people, it's illuminating to institutional investors all the time to show them the actual options flow data, especially into the election. That's a very good example.
Right.
People were buying the shit out of protection. Like, no matter what they were saying about their political views, they were buying protection big time. Like, you had basically, which I don't need to review, but I mean, because you're not allowed to actually hedge past your nose anymore.
Right.
You have to hedge the day before the event, whether it's an NVIDIA earnings report, which you're seeing today, or CPI number or election. It all gets crowded into that 1 to 2 day window.
Right.
And that therefore forces behavior.
One math problem I quit on is the Bank for International Settlements estimated that the notional value of all derivatives is $1 quadrillion, which is 1,000 trillion. For you don't know the Q word. But I said, okay, I get that, I understand that. But what about the free option embedded in the ability to withdraw an option bid or offer? In other words, I can buy an option, I can put in a bid or an offer, but I can pull it. And so that's the free option to pull that. What's that value even, which is exponentially greater than all the notional value of all the options that are actually on the book. I mean, they're off the books, but wherever they are, they're in the footnotes. But there's an option on the option, which is I can withdraw it, and it doesn't cost me anything. So what's that number? Well, I don't know. It's exponentially greater, but you're getting close to infinity at some point. But you're right. So it's and a lot of those rules that you mentioned, some are in place, some long gone, but they served a purpose, which was they were tapping the brakes.
Yep.
Not slamming the
Really
brakes.
good point.
And so that's kind of one solution. But what I described could happen tomorrow. I'm not saying it will happen tomorrow. It might happen years from now, but it's certain that it will happen because the dynamics are there and the embedded fragility is there.
Well, it's been happening. That's your point too. I mean, it's already happening. It's just what window of clock, or as Gabriel would say, like clock time of volatility or cycle time, are you actually looking at?
Right.
And so there are plenty of these things that, for somebody like me, looking at it every day in this book, where I'm like, whoa, like the other guy said, like, oh, he's figured it out a little bit here. This is a problem.
And then in chapter 2, I revisit. I invented the scenario. It's a fictional scenario, but highly realistic in chapter 1, and then I get into the things we talked about, solutions. So for chapter 2, I kind of revisit the Silicon Valley Bank crisis, and there were 5 significant bank failures. There was Signature Bank, Silvergate, Silicon Valley, Credit Suisse, which had been around since, like, I think 1887 or something like that, and then First Republic. So there were 5 banks in about 60 days that failed, all significant one way or the other. People say, well, we got through that, the Fed did what they had to do.
We got through that. Yeah, you got through that already.
But how? So on March 11th and March 12th, it was the Friday night after the Silicon Valley failure. The FDIC and the Fed and the Treasury came out with a joint announcement. And the FDIC said, and here they picked up the G20 bail-in rules. Remember, G20 Brisbane 2014, not long after the 2008, 2009 crisis. They knew that publics were up in arms about bailouts, nobody lost their jobs, et cetera, taxpayer money was used. So they said, well, okay, from now on, no more bailouts. We're going to have bail-ins. And here's how they work. When a bank fails, equity goes to zero. Bondholders, you're taking a haircut. We got to figure out the size of the hole in the balance sheet, but whatever it is, you're taking a haircut. Depositors, you're protected up to the insurance limit, $250,000 in the U.S., 100,000 euros in Europe, whatever that is. So you're okay. But deposits in excess of that are at risk. Haircuts on the bonds, you're at risk, et cetera. And we're going to make all of you pay, take that haircut, take that loss before we use a dime in taxpayer money. And that was the big solution. And then Dodd-Frank that was earlier, but pretended to do some of that. So on the Friday night, the FDIC said, if you have a deposit, you're insured up to $250,000, no problem. Beyond that, we're going to give you a due bill, like a chit, and we'll get back to you on the value. We got to do the liquidation, we got to sell it, we're not sure, 10 cents on the dollar, 90 cents, 6 months a year, we don't know. We'll get back to you and send you a check. And but 97% of the deposits at Silicon Valley Bank were uninsured. There were $3 billion deposits. Cisco was a depositor. Not all, but many of the startups in Silicon Valley had deposits there. The working capital, maybe 5 or 10 million, but that's how they were paying the rent. So then, what follows, what I call a crybaby weekend, where Bill Ackman, all these guys, and others, Silicon Valley, we're all calling the White House saying, "You can't do this. You're going to shut down all the startups." I mean, 90% of them fail anyway. But leave that aside. You're going to shut down these startups. They can't pay the rent. They're going to have to lay off their workers. There's going to be mass unemployment, et cetera, et cetera. And then the White House, I don't know exactly what conversations took place, but by 6 p.m. on Sunday, so 48 hours later, the FDIC comes out and says, "Just kidding. Deposits are insured up to 100%, regardless of size, et cetera." And then the Fed said, "Oh, by the way, those Treasury notes you have, shoot them in. We don't care what they're worth. We'll give you 100 cents on the dollar, 1-year loan. Take the Treasury as collateral. Low interest. The exact opposite of what Badgett said. It should be high rate, with good collateral. So we don't care if they're worth 70 or 80 cents on the dollar, which they were, because interest rates had gone up. In the meantime, we'll take them and give you par, and for every bond in the universe, if you're a member bank." So it worked. People got calmed down. A lot of banks took advantage of it, and they got cash, et cetera. But I thought to myself, what else have you got? You just guaranteed every deposit in the system, and you just guaranteed every Treasury bond at par. What else can you do in the next panic? And that's really the point. It's like they've used up their bag of tricks. There's only one more thing they can do, which is nationalize the banks. So my warning, first of all, this will happen again, I guarantee it. But it doesn't mean that the entire system collapses, although it could. But it sure means equity goes to zero. So that's the idea that I'll buy bank stocks and bid them up or whatever because the Fed's got my back. Not necessarily, because it's not clear how much more they can do that they haven't already done, and that's the point. So that's again okay. So that's human nature. That's bad regulation. That's bailouts, on steroids, et cetera. But AI amplifies that, and that's really the point. It's not as if AI is not a party to everything we just described. So now, what was going on the Wednesday or the Thursday at Silicon Valley Bank was failing. Well, we all remember the grainy black and white photos from the 1930s of guys, mostly men, they're in overcoats and fedoras, and they're lined up in the rain trying to get their deposit out of the bank, except the doors were closed and the insiders already took the money, which was true. That happened that way. But now you just, you pick up your iPhone and you tap a few buttons and the money's gone, and then you text your friend, get out while there's still time. This is happening at the speed of light, obviously, but it's all being amplified and accelerated by AI. So again, it's the feedback loop, and there are feedback loops in human nature, but when you harness AI to that, the feedback loop is powerful. It amplifies it and accelerates it, and you get into a flash crash that you can't control.
Mm-hmm. And then you go on to, I think in chapter 3, get into, there are a lot of different definitions of money that go away in the scenario that you just explained with Silicon Valley Bank. Like as our friend Judy Shelton would say, money is a moral contract.
Right.
There was nothing moral about what happened there. That is a direct hit to the taxpayer in both inflation and the more broad-based bailing in.
Right.
There's no way to argue that. I mean, and then on the other side, we just become so like this point. Maybe get into because the title of the chapter, I believe, is called Moneyness. Like explain what that means, and people becoming almost numb to what actual money is.
Right. Well, we've definitely lost the thread, and that's really the point of the chapter. And what's different? What's the definition of money? Oh, we all know what money is. I'm sorry. Go to the Fed's website. They got M0, M1, M2. The Fed doesn't know what money is. They got 3 or 4 definitions, right off the bat. And then you get into all the foreign currencies. But you're right. At the end of the day, it boils down to trust. It's a contract between the people and whoever is issuing the money. Typically, a bank could be a central bank, but that's just a different kind of bank. But I really go way beyond that, and you got to go back 2,400 years to Plato, who was really the bridge between a pre-literate, pre-linear society and all the writing and linear thinking, and affects the brain, how we process things, since. And people go, hey, read the Iliad, read the Odyssey. Homer, he was a really good writer. Homer never wrote a word. He never wrote a word. He was a poet, and it was all oral. And you say, well, how could you learn a 1,000-page poem? And my edition is like 900 pages or whatever. How could you learn a 900-page poem? Repetition. There were techniques that they used. Rhyming was not the main one. There was some rhyming, but it was mostly alliteration. But there were also modules, the Wine Dark Sea. Well, that was kind of something that anybody could use in any poem if it suited you, etc. And the Iliad, by the way, was not a poem. It was an encyclopedia of Greek behavior. If Achilles was having a good day, we're supposed to say, well, that's the way to be. And Achilles is, being a spoiled brat and breaking things. Don't be like Achilles. And he taught you how to build ships. The famous chapter on how you build triremes. It was a carpenter's manual for building a vessel. It was an encyclopedia of Greek life and Greek education. And that was Plato's problem, because in the Republic, Plato trashed Homer. Said, we got to get away from this. We can't do this anymore. And everyone's like, hey, Homer's great. What do you got against Homer? Well, the answer is that he wanted to go to a phonetic alphabet, a written linear mode. And the guy who pulled it off was Aristotle. And that's why we have so many more. We have zero from Socrates. Socrates never wrote anything. What we know comes from Plato. Plato wrote some stuff, but Aristotle wrote far more. But Plato was the bridge. Now, come forward 2,500 years. Where are we today? We're coming out the other end of that tunnel. We are, it's not a trade secret so much, but my book is, half the sales are audiobooks. People love audiobooks, and I read them myself.
Podcasts, audiobooks?
Yeah,
like that.
podcasts, audiobooks. This interview. You and I might sit down and write something later today, but we're on the air right now. So, and here I go back to Marshall McLuhan. I studied very closely in the 60s. The problem with guys like McLuhan and others, if you're 75, 80 years ahead of your time, it takes 80 years to figure out that you were right, but he was. And he said, he really started with the telegraph, television, radio, phonographic records, and now the computer age, which he was part of, but he could foresee where this is all going. Very few people read anymore. I've had a lot of assignments in my career where people say, well, give it to Jim because he can write. It wasn't like that's my area of expertise or I knew the most about it. And I said, well, everybody can write, can't they? Well, it turns out that no. I mean,
no.
A lot of people they're not illiterate, they're kind of illiterate, and that is, and they can't write, but that is accelerated today. So I look at hip hop music, look at rap, look at videos and a lot of other medium, and I say we are leaving the written word behind, and we are getting into a completely acoustic world, oral, A-U-R-A-L, spoken, heard, and back to drum beats in the jungle. And McLuhan used the phrase "the global village." He said, and this I find true every day. He said, everybody knows everything at once. Like I do forecasting, you do, and it's hard work. It's really hard to get right. But you can't beat the telegraph. I mean, you can't. It's very hard to think of something if you know it. Everybody knows it at the same time. Now you can do better analysis, and that's really the art. There used to be an intelligence gathering at the CIA. It was all about, can I get the information? There's still some of that, but open source intelligence, very few things are like behind in vaults that you actually can't find on the internet. So it's an ocean of information, but how good are you at analysis? That's the scarce resource. So anyway, we're drowning in this information, but it's all coming at us, as I say, digitally, orally, and McLuhan made the point, he talked about the global village, he said, yeah, we're all talking to each other, we all hear the same thing at once, but villages are not necessarily friendly places. There's this kind of kumbaya sense to it. That's not what McLuhan meant. He said that. He said they can be very, tribal cultures can be very nasty. So tribalism we see among nations, political parties in the U.S., the partisanship, broadly speaking, we're all in these tribes, we're all listening, we're all watching television, which is a highly immersive medium, and we're getting away from the world. So my point is, what does money mean in that world? Do we get to a point where money is a sound? And if it is, How does AI keep up with that? AI is all about large language models. What are large language models? Well, there are certain techniques. You basically tokenize words. You create word clusters. You create a cloud, and you say if this word's proximate to this word more than X% of the time, they probably go together. This is how the computer's thinking. They probably go together. So when I get a prompt, I'll produce a GPT output, and it'll use those two words, and they often get it right. Actually, I've read a lot of GPT output. It's grammatical. You give it on the old school, you give it like a C plus. Today they probably give it an A, but it is it's grammatical, it's spelled correctly, but it's often wrong.
Yeah.
And I advanced what I call the puppy theory of GPT, and that says if you're training a puppy to fetch a ball, you throw the ball. The puppy gets the ball and brings it back. You give it a pat on the head or maybe a dog treat. It's like a positive reinforcement. Well, GPT works the same way. It wants a pat on the head. It wants to give you all the information you need. And it will just make things up if it has to.
Yep.
There was a case I talk about in the book where a guy had GPT and he gave it a prompt. He said, write a biography of, and then he used his own name. The computer doesn't know who he is. Use his own name. So the computer does this thing, comes back, and he's reading the output. And he says, pretty good. Born this place, went to school here, had these accomplishments, et cetera, and he died in 2019. And the guy's like, well, that's interesting, I'm still alive. So he said, well, how did he die? And the computer kept going. It made up a cause of death, et cetera. Well, it turns out that the writer, the guy giving the GPT the prompt, was the obituary writer for The Guardian. So the computer finds his name on 1,000 obituaries because he wrote 1,000 obituaries, and he said, well, he must be dead if he has that many obituaries. So there's a logic to it. It's actually inductive logic, but it's just wrong. And so the point is, if you're a subject matter expert, you can probably spot that if you're good. But what if you're not? If you're not a subject matter expert and you take it at face value because you're relying on the computer and it's completely invented or even partially invented, which is even more difficult because the rest of it makes sense, there's a misplaced reliance. You're going to draw the wrong conclusions. You're going to undertake the wrong acts, et cetera. But that's how this stuff works. My favorite one is Google came out with what's that? That's the stock Alphabet. Yeah. So Google comes out with their GPT. They call it Gemini. So they put it out there, and the way it works, you give it a prompt, which is a question, and it gives you output. So one user gave it a prompt and said, "Give me a picture of a pope, image of a pope," and it came back with 3 women and 3 different images of women in papal vestments, and a shaman, and somebody else gave it a prompt, said, give me a picture of a Viking, horned helmet, so on. It did. Came back with a Viking. It was black. And so I happen to be Catholic. I know there have been 266 popes in 2,000 years, and they were all men. Now, if you want to debate the role of women in the church, we can take that to the bar. But it's just a fact that there were 266 men, no female popes. And you've been to Scandinavia, the fair-skinned blonde, no black Vikings in the 11th century. So Sergey Brin comes out and goes, we really screwed that one up. No, they didn't. It worked. This is my point. It worked exactly the way it was programmed.
Yeah.
There were no glitches in that. It worked as programmed. What they did was something called prompt injection. And prompt injection is you give it the prompt, but it then adds to it. It adds something that, at least in the engineers at Google's mind, would make the world a better place. Do no evil, right? So it interprets as, give me an image of a pope in a world where men and women are treated equally in every respect, there's no discrimination. Well, if that's your question, you might get a female pope. That's not the wrong answer. It's just a different question than the one you asked. Now, what is that about? That's about scrubbing bias out of, by the way, these training sets, I should mention, is the internet. You can buy the internet. A lot of people buy a subset. You might only need like 5 petabytes or whatever, but it's basically the internet. And so, yeah, the good, the bad, and the ugly, it's all in there. But these engineers are trying to scrub bias out of the training materials, or at least use prompt injection so that you never get an answer that they might view, they being Google, as biased. Well, I talked to Gilman Louie about this. I don't know if you know Gilman. he's very successful, Silicon Valley entrepreneur, multiple successes. But he also was CEO of InQtel, which is the CIA's venture capital firm. So CIA was very science and technology keeping up. They said, well, we'll just invest in Silicon Valley, but they had their own firm to do that. He was CEO of that. So he's got 1 foot in Silicon Valley, 1 foot in Langley. Nobody is kind of more plugged into all this stuff than Gilman. And we talked about this around in Santa Fe. And I said, look, bias is a good thing. There are some biases that are repugnant. That's easy. Yeah, racism is repugnant, various forms of sexism repugnant, et cetera. But most biases actually are why we're still around. They keep us alive. You know, if I'm a Neolithic hunter and I go out and I see the mastodons are over there, but there's a lot of rocks and there's like not so much game over there, but no rocks, I have a bias away from the rocks because there could be a saber-toothed tiger behind the rock. And if I go that way, I'm going to get killed and I'll die and my family will die.
First and foremost, welcome to Hedgeye Nation. Make no mistake, my #1 goal is to help you preserve and protect your hard-earned capital. Who helps you with that? Like, how many people have actually helped you preserve and protect that capital? They can't. They don't have a process. You need a better way. We need to get better each and every day. There's a lot of baggage out there. There's the old wall, a lot of bullshit. There's CNBC. That's not who we are. We have a process. We're going to help you get better. We have a team of over 40 analysts that are going to help us do that, and I'm looking forward to it.
Hedgeye founder and CEO Keith McCullough's long-awaited new book, Master the Market, is available now. In this 52-page ebook, Keith McCullough distills decades of Wall Street experience into actionable insights. Discover how to navigate market cycles, avoid major losses, and invest with the confidence of a seasoned pro. Download your free copy right now. Go to hedgeye.com/book. That's hedgeye.com/book.
But that's where bias, which you could also call intuition or some other, come back to that, saves your life because you're biased away from one outcome versus another to the one that's a little bit safer, and even if you have to work harder to get the game. So most biases are good. Most biases help us survive. Some are repugnant. But what's the solution? Well, Google's solution, and others, I shouldn't pick on Google, Facebook, Apple, Microsoft, OpenAI, they're not a public company, but they're all doing the same thing, which is the other problem. They're all doing the same thing. But they're trying to scrub it. It's very Orwellian, down the memory hole. We all understand that. And then they're trying to make the world a better place by substituting their bias for the other bias. So first, a couple problems. Number one, it's false. It's
bullshit.
Yeah, well, exactly. Yeah, those repugnant biases are real. Are we going to, scrub every reference to the Holocaust because it was a horrific, horrible, evil outcome? So that, oh, gee, we don't expose the snowflakes to that. Well, okay, you might just have another one if you go down that road. Number two, who's to say your bias is better than the one you think you're getting rid of? The solution is what we talked about. Is like just let the truth come out. Just don't filter based on bias. Use good algorithms, but rely on education, morality, religion, subject matter expertise, training. So rely on a number of common sense filters to know what's good and what's bad. Don't try to tell people and don't engage in that kind of scrubbing. But it's going on. And
scrubbing and filtering. I mean, it just makes the problem that we've had since the pandemic, with all these new retail investors, is that you can meme investing. You can believe whatever you want. Right. It doesn't mean that it's true.
Right.
What this does is it makes the veil of bullshit sound more believable.
That's right.
And then you're like, okay, now what? Well, okay, now I got these bigger, too big to fail kind of non-bank institutions, like you just mentioned, Google, that are going to be my gatekeeper. Mm-hmm. Bullshit. I mean, one of the main reasons why Trump won is because people don't believe the MSM bullshit.
Well, that's right. Look at just go back 5 years. You don't have to go back any further. Look at just the outright lies. So, I wrote about this in one of my earlier books, The New Great Depression. So COVID, okay. Social distancing, 6 6 feet social distancing. That was proposed by a German virologist in the late 19th century who later said, I made it up. I just made it up, okay? Masks don't work. It's an airborne virus. The virus is 1/5000th the width of the weave of the mask. It goes right through the mask. Plus, if you're wearing a mask, you're recirculating CO2, which degrades your brain functions. Masks don't work. The vaccine, I said in, I think on the first page, in chapter 1, there will be no vaccine for COVID. And I actually relied on Jay Bhattacharya. This is 4 years ago. Right? He's probably going to be head of, maybe the National Institutes of Health. But, and everyone said, oh, Jim, you got that one wrong. We got a vaccine. It's not a vaccine. It's an experimental gene modification therapy with huge amounts of side effects, a lot of fatalities. You can stick it in your arm, but it's not a vaccine. Because there were 5 other coronaviruses, and we were unable to get a vaccine for any of them, including the common cold. That's the coronavirus. So we still get colds, unfortunately. And I said lockdowns don't work. Now again, it's all documented. So why did I say that? And that book came out in 2021, but it was mostly written in 2020, right at the beginning of the pandemic. Well, there's a guy named D.A. Henderson who was given the credit for single-handedly, with a team, but he was the leader of the team that eradicated smallpox on the planet Earth. He got rid of smallpox. He won the Presidential Medal of Freedom. He was dean of the Bloomberg Johns Hopkins School of Public Health. The greatest virologist, immunologist of the 20th century, on a par with Louis Pasteur. That's who D.A. Henderson is. George W. Bush got spooked by the avian flu in 2005. And he said, we got to get on this. And Henderson looked at it, and he wrote a paper, peer-reviewed, a couple of co-authors, and he said, lockdowns don't work. And he explained why. So here you have the greatest virologist of the 20th century in 2006 writing a paper saying lockdowns don't work. They just don't work. Don't do them. Not just the costs are too high. That's true, but they don't work. Well, I read the paper. I said, yeah, it makes sense. But we knew that in 2020. So why did we lock down the economy and the world really in 2020 when we had a paper from the #1 guy in 2006 that said lockdowns don't work? Well, there's a whole backstory there of Fauci trying to cover his tracks because he financed the virus in Wuhan. I've been to Wuhan, the Wuhan Institute of Virology. So the outbreak started a block away from the bioweapons lab, but one had nothing to do with the other. I mean, that's what we were told at the time. But my point is, if you said that, I did say it, I don't know why I haven't been canceled, but if you said that, you were deplatformed, you were lowered in the rankings on Google, you were kicked off of Twitter at the time, or worse, you didn't get grants, you couldn't get published, you were driven out of your positions, you were fired, etc. If you said masks don't work, the vaccine.
Yeah.
It's actually the one time in my career I've done a lot of interviews where I was on live air. It was a radio station, a talk radio station in Seattle, of course, and the host freaked out. She yelled at the control, "Pull the plug, pull his mic, get this guy up the air." But
she said that? Wow.
yeah, it was. But Seattle, would expect. But I said, the vaccines don't work. It's not even a vaccine. And she goes, "What do you mean? That's disinformation or misinformation, whatever." I said, "What's your source for that?" I said, "Well, Johns Hopkins University website in December 2022, 5 million people who were double vaxxed and boosted got COVID. You telling me that vaccine works?" And she pulled the mic, but that was true. So that actually changed a lot of lives. 5 million people who were double vaxxed and boosted, not unvaxxed, got COVID. And they're like, I guess this stuff doesn't work. But my point is, and so climate change, the best evidence is that CO2 doesn't cause warming. If there's warming, it might release CO2, but CO2 is the effect, not the cause. The climate nuts got to have that exactly backwards. So they lied about the pandemic. They lied about climate change. They lied about the war in Ukraine. I mean, even to this day, turning point, wonder weapon. Russia is moving across the entire front. They'll soon be on the Dnieper River. Kiev is collapsing. All the weapons have failed. Abrams tanks are burning on the battlefield. But we were told, we're giving them armor. We're giving them F-16s. They're getting shot down. The pilots aren't trained. I mean, but the Economist, Financial Times, New York Times, they're just lying about the war in Ukraine. Americans are just now starting to catch up. So, okay. And you can get the deplatform for that. So the people who lie to us about COVID, climate change, the war in Ukraine, and more, they are the gatekeepers. This is exactly what you said. They're the gatekeepers on AI and GPT. So you've been lying to me for 5 years. Why should I trust you now?
Well, I mean, it's interesting because I think AI, if it allows for all the truth to be dumped into it, like just think about what you just said. If you had AI, broad-based, deployed in 2020 instead of 2022, then people could just look it up and they could actually know. Like I'd say 90, like whatever, a large percentage of what you just said on climate change and COVID, I wouldn't be able to fact check that. I think my healthcare policy expert could fact check that.
Right.
But I definitely know that I could go and look at the non-bullshit versions of AI tools that we use in addition to my human asset to say, okay, like what did Rickards say that's bullshit?
Yep.
I mean, that's my job, right? I mean, the job isn't to cancel. I mean, so maybe in a way that I guess but we're never going to get the keys to the castle. We're not going to decide what the rules are. We're not going to decide what the bias or non-bias is. We just have to just keep on, banging it out on our own, I guess.
Yeah, I mean, I don't do getting a stock recommendation, but just at a kind of a macro level, probably some of the winners in AI are going to be like small startup companies that aren't burdened by this, the legacy censoring, the filtering, and all that they just kind of went, hey, let's just get the information out there and be factual.
I thought coming out of the election, I mean, and I'm no Trump fan. I mean, it has nothing to do with that. I'm not a fan of any of these politicians. I mean, I said that one of the biggest winners is independent media, whether it be, small, little Hedgeye as Tucker Carlson called us when we revealed the, he said, when we revealed like Sam Bankman fraud as a fraud.
Right.
In a conversation like this between me and Mark Cohodes.
Yeah.
Well ahead of MSM even acknowledging that we had the conversation, never mind that it could be true.
Yep.
Right?
Right.
Like Tucker Carlson, first person to pop it up on a video when he was at Fox. He's like a little media firm in Stanford. That's fine. But there are like, there's Joe Rogan. There's like, if you want to go learn about like what J.D. Vance actually thinks on immigration, then listen to his interview with Joe Rogan.
Yep.
You want to, like listen to his interview with JFK or RFK. I mean, it's there, and the people know it's there.
Right.
And a lot of people voted, maybe not because they like Trump, because they know that it's there.
Yep.
So how do you think that not that you need to solve for that problem, but there is a solution, which is pick your sources.
Yeah, I'm a big baseball fan. I remember the 2022 playoffs. I watched it intensely, and the umpires had the FTX logo. They did.
F1 race.
I saw it. I was like, I understand the Bitcoin math and the engineering and all that, but I didn't at the time know what FTX was. And I'm like, what is that, like some new kind of stock exchange or something like that? Well, but they sponsored everything, and it was you know the story better than anyone. And I always, I hope people enjoy my book, but I always say it's worth buying just for the footnotes, because I have a couple hundred footnotes, because I have to do that. I'm going to get shot at to say the things I say. Think, Rickards, what do you know about this? So I go, well, here are 5 peer-reviewed papers. Read them and judge for yourself. But there's a lot of sourcing, footnotes, and 20 or 30 pages of sourcing in the book for people who want to drill a little bit better. A little bit deeper. One of my favorite papers, a team did an experiment, and they had 5-year-olds against AI. So it wasn't like geniuses or engineers or whatever. It was a bunch of 5-year-olds, and they put a teapot, it was a thermos, but like a teapot on a table, and a ruler, and they said, draw a circle. And the computer says, well, I see the ruler. A ruler is very similar to a compass. A compass would be the preferred instrument, or irregular curve. I took a couple years of engineering drawing. They had all these tools back before computers. And so the computer's like, ruler is kind of like a compass, so I'll take the ruler and try to make a circle. And the kids took the teapot and traced the bottom of the teapot and made a perfect circle. So, but that, all documented, all true, but it makes the point that the algorithm, the logic is to build these clusters, and a compass, an irregular curve, a T-square, and a ruler would all be in the same cloud. That makes sense. The teapot would be over here with the English or the Japanese or whatever. But the kids figured it out intuitively, just like that.
What is it's interesting? It's like it's the old adage, like going back to what people need and want to prove.
Right.
Like, can you circle a square?
Yeah.
Like, how many different people? You can look it up. How many people have tried to prove that you can?
Right.
But can you? No, you can't circle a square.
Well, exactly.
Like, Jordan Ellenberg just wrote this great book called Shape. And he's he's a geometry guy.
Yeah.
And when you start to think about geometry and kind of like the core of what you can start to believe,
Right.
I think that would probably be in there. But not being Euclidean, start to get to fractal geometry, and then you're kind of, at least I felt like I was on my way.
Right.
Even some hockey player could start to do that instead of, God forbid, believing some linear econ or some person who has to believe what's associated with their political party or their Nobel Prize or whatever.
Yeah.
And I see an increasing amount of people like in the institutional community who are much more like me, even if they are political, which is interesting.
Right. One of the interesting things in the political arena, not to get too deep in that or pick sides or whatever, is that the demise of expertise. Because Kamala Harris, I'm not picking on her, but just a fact, her economic program or whatever, or no, I guess Trump's tariffs were going to cause a depression, and it was like a sales tax on the American people. And we have 16 Nobel Prize winning economists who agree with me. This is Harris's claim, 16 Nobel Prize winning economists. What I recommend to people, go look at the winners of the Nobel Prize in economics since 1969. Just go down the list. You will find that 2/3 of them were awarded for stuff that's just not true, just garbage. The efficient market hypothesis, Eugene Fama won the Nobel Prize for the efficient market hypothesis. There's nothing efficient about markets. They're not efficient. They don't move slowly and gradually and steadily, and the idea you can't beat the market. Of course you can beat the market. If you don't have to steal information, you can come up with it yourself. You can beat the market that way. But the efficient market hypothesis is garbage, but the guy won the Nobel Prize. And just kind of go down the list, the risk-free rate, I know Myron Scholes very well, nice guy, but the point is they assume a risk-free rate, which is basically the overnight treasury bill rate or the shortest term treasury bill. Well, talk to the Russians about treasury bills. That we just froze, well, not just, in 2022, we froze $300 billion of lawfully acquired treasury securities owned by the Central Bank of Russia. They made the money, they made dollars selling oil, they bought treasury notes, they kept them in, most of them in Euroclear, which is a $40 trillion clearing organization in Brussels. And we froze them. Now we're in the process of stealing them, which we're very good at freezing. Now we're seizing, we're stealing them as collateral for a $50 billion loan to Ukraine to fight the war against Russia, which Biden's trying to push through before Trump gets sworn in. So again, talk to the Russians about the risk-free rate in U.S. Treasuries. It doesn't exist, and most of that stuff is junk science. But I knew that a long time ago. But people are now calling it out. They're like, oh, and my favorite was Trump with this John Micklethwait, who's I think the economic editor-in-chief of Bloomberg. I'm pretty sure it's Bloomberg. He said he was interviewing Trump, and he said, well, your tariffs are going to cause this, cause price increases and inflation. Trump goes, no, they're not. They're going to promote high-paying U.S. jobs. If you're Chinese, you want to sell to Americans, that's fine. You have to build it here. You can't ship it in. You got to build the plants here, which has a whole aspects in terms of acquisitions and CFIUS and the Committee on Foreign Investment in the U.S. and all that. But Trump's answer was, John, how does it feel to have been wrong for 25 years? It was instead of bowing down to the guy and saying, oh, we're going to work through that, he's like, you're just wrong. And that kind of belief and expertise is collapsing across the board. But the example with the teapot, drawing the perfect circle, that's another. That's kind of the good news at the end of the book, because with all the concerns about artificial intelligence, and they're legitimate, and I explore them all in some depth, there's this notion that, well, it's going to get worse because there's going to be AGI, which is artificial general intelligence, or superintelligence. But what they mean is a kind of computerized intelligence. By the way, there's nothing intelligent about AI. It's a great misnomer. It is artificial. It's not intelligent. It's math. But leaving that aside, that sooner than later, and one of the top expert estimates by 2080, but he says if I'm wrong, it'll be sooner than that, so maybe 2060 or whatever. The computers will be so much smarter than we are that we will be to the supercomputers what the apes are to humans. Like we'll kind of look up at them as a superior form of intelligence, et cetera. And then you get into what they call the singleton, which is, the supercomputers start fighting war for dominance between themselves.
Yep.
They don't care about people anymore. And it doesn't make sense just to have one supercomputer that amalgamates all the computers in the world, runs the universe basically, and you kind of go on from there. And it's an extrapolation of what we have today. It's not, I can't prove it's wrong, but there is a rebuttal to that, which should give us all a little bit of hope, which is, I talked about, Plato's the father of philosophy, but Aristotle is the father of logic. And Aristotle used, they call them syllogisms, but basically there's a major premise, a minor premise, and a conclusion. And it flows very logically, and he gave many examples of that. All men are mortal. Socrates is a man, therefore Socrates is mortal. Okay, that works. But there are a lot that don't work. If you get the major premise wrong, you can have a logical sequence with the wrong conclusion. So that's deductive logic. Inductive logic, now we're up to David Hume, is that if you basically survey the field, if you have enough examples, if something is overwhelmingly dominant, you infer that, well, that must be the way it is. That must be true, because it's everywhere I look and I can't find any contrary examples. Till you get to Adelaide, Australia, and you find a black swan. I've been down there. There are black swans swimming around. And inductive logic and deductive logic both have limitations. One is if the major premise is wrong, and the other one is if your inference is wrong because there's a counterexample. But they're pretty good. And the point is, you can put them into mathematical equations. You can develop them. You can use them for processing, and that's what computers are. They use those two forms of logic in all the algorithms. But there's a third form of logic, which is almost unknown except by experience, called abductive logic. And this was the emerged from the work of Charles Sanders Peirce in the 19th century. Peirce, by the way, was the founder of pragmatism. William James, like I was taught William James was the father of pragmatism, but William James said, I got it from Peirce, like he was the real father of pragmatism. Also the father of semiotics, another guy 100 years ahead of his time. And semiotics today, which is basically interpreting signals, is the basis of a lot of philosophy, literary criticism, and a lot else. He came up with that 130 years ago. But he outlined something called abductive logic. And abductive logic, not to get too deep in the weeds, but basically it's common sense, intuition, gut instinct. And you can formalize it, but that's what it is. That is non-programmable. No one has ever been able to program gut instinct or intuition or the way we make a lot of our decisions, but it's how humans make most of their decisions. You can be wrong, but a lot of times you say, I'll go with my gut, it's funny, I'm hearing the word common sense coming from the Trump camp a lot. Get away from all these extreme views. Okay, pick sides, whatever, but common sense. But that's what Peirce said. But the point is, you can't program it, and if you can't program it, that puts very definite limits on how far superintelligence can go. And to give you an actual use case for that, in chapter 4, I talk about nuclear warfighting. Kind of timely today, given what happened last night with Putin and the attack on his missiles. But I started studying nuclear warfighting in 1969. But the works that I studied at the time were mostly written in the late 50s, early 60s. So it was Albert and Roberta Wohlstetter, Paul Nitze, Henry Kissinger, but the big brain was Herman Kahn. And Herman Kahn said, in effect, nobody wakes up on a nice day and says, hey, nice day, I think I'll start a nuclear war. That's not how it happens. Nuclear war would emerge from an escalatory pattern. He called it the ladder. You climb the ladder. So you have two antagonists, somebody does something provocative, the other side shoots back, this side raises the ante, this side answers, and pretty soon you're going up that escalatory ladder and you're heading towards nuclear annihilation. And he actually had 54 steps, and he elaborated on this at length. And he said, what you're supposed to do as a leader or policymaker is, first of all, know that you're on the ladder. Just examine yourself and say, hey, we're on that ladder right now, okay? Number 2, take a beat. And number 3, climb down. And that's exactly what happened in the Cuban Missile Crisis. They didn't have Kahn's learning at the time, but it was Khrushchev who actually sent a letter to Kennedy through a reporter, believe it or not, saying, hey, we got this knot. Are we going to tighten the knot, or do you want to try to untie it? And then Kennedy said, let's figure this out, and they did. But there were 2 cases in the 1980s, much less well known. One of them was the KGB. It was Soviet Union at the time, but basically Russia. The KGB had early forms of artificial intelligence, and they had a program called OKO, codename OKO, and basically it could detect incoming U.S. missiles. So this one Lieutenant Colonel Stanislav Petrov saw that the radar showed the missiles coming in and got a launch warning. The system said launch, and the doctrine was launch on warning. When the missiles are coming in, don't wait till you get hit. Fire your missiles first, so they don't get destroyed. So his orders were notify his superiors, and if he had done that, you're going up the chain, the Soviets probably would have fired the missiles at the United States. But he had worked on the system, and he knew it had flaws, and he looked at it and said, you know what, I've got 5 missiles on the screen. He said if the United States were attacking, they wouldn't use 5 missiles, they would use 200 missiles. So it could be a false alarm. He disobeyed orders, he did not escalate. It turns out it was the reflection of the sun off of some clouds that got picked up as incoming missiles. It was a flaw in the system, and he was later known as the man who saved the world. There was another case, Able Archer 83, which was a NATO war game. So NATO was simulating a nuclear attack on Russia. We weren't going to attack them, but we were doing a war game, pretending as if we were going to attack. The KGB was already spooked out about the superiority of the U.S. economy, et cetera, and Reagan's, some of Reagan's comments. So, but they interpreted it as a facade for a real nuclear attack, that the U.S. and NATO were escalating towards a nuclear attack. That's what they thought was going to happen. They got their bombers fueled up, kind of warmed up on the runway. They readied their missile silos. They were ready, because the one thing about nuclear warfighting, you're always better off striking first. It's a bad result in all cases, but this first strike is definitely better. So there was a Lieutenant General Perutz in the U.S. Army who got intelligence about what the Soviets were doing, and told the war game, said, dial it down. Just, okay, don't do the next move, dial it down, let's communicate with the Soviets. They did. The Russians dialed it down, and we prevented nuclear war. But here's the point. In both cases, what saved the world? What did Petrov and Perutz do? They disobeyed orders. They relied on their gut instinct. They did not use standard operating procedure. They just said, something's not right here, and we're going to dial it down, exactly what Con recommended. Computers can't do that. So my warning to the Pentagon is, do not put AI in the nuclear kill chain. Don't do it. Because if you do, you're going to get orders where you're just going to go right up the ladder. It's kind of like we talk about the specialists on the New York Stock Exchange who would try to damp things down a little bit. You take the specialists away, and everyone's just all sellers, no buyers. Here, you have all escalation, no common sense, no intuition, no gut instinct that says no. But the world was saved twice from nuclear war by people who disobeyed orders and relied on their guts. That is non-programmable, and so keep AI out of the kill chain. The problem is there's enormous pressure to do so. The Chinese are working on it. Who wants to be left out? And again, going back to anthropomorphization, you tend to, the thing's saying you escalate. The computer's telling you to escalate. You're treating it like an advisor or adjunct or something like that. You're giving it too much credit. So that's all I can do. Analyze it, give warnings, explain it to people. I never dumb it down, but I do write in plain English. There's no reason to use all this jargon. I mean, I've yet to see a PhD level concept that you couldn't describe in plain English if you took the time to do it. So hopefully it's accessible in that sense. But it's pretty high level stuff. But again, just encouraged by the fact that humans still have an edge if only we use it.
Yeah, that's encouraging. Nice way to end it, because we're out of time.
Okay.
But abductive reasoning, pragmatism, experience, these are all things. And since we're not going to cancel a conversation like this, leaders are allowed to listen, consider things, in their entirety that other people maybe they have or have not considered. And I always say this, but thank you for writing all the books that you've written and having the courage to have an opinion, but an educated opinion that's got a basis. And like you said, you have all your footnotes, and you have all the work that you've done. So that's super helpful to our community and to everybody else.
Yeah. Thanks, Keith.
Right. He's the one and only Jim Rickards. I hope you enjoyed our real conversation.